With that, let's go across to Ramaswamy Narayanan, the CMD of General Insurance Corporation of India. So firstly, sir, the Q4 combined ratio, if you look at, stood at around 89.26%. What made the improvement in the combined ratio for the fourth quarter, and what would be the target for FY25?
Yes, normally the combined ratio for the fourth quarter is better. Like I said in the earlier interview as well, normally our fourth quarter tends to be better because there are no catastrophic events happening during that time, both in India as well as internationally. So that has helped us, and it is more or less at the same level as it was last year. So in that sense, yes, it was as per expectations, maybe a couple of points better than expectations. If you look at the overall year, we finished with a combined of 111. If you look at the combined as it was on at the end of the third quarter, that is December 23, it was close to 118. At that time, I had generally said that we would be able to bring down that combined by about 4 percentage points, which we have actually done much better. So we have come down to about 111.8 now, so which is almost a 6% reduction compared to the third quarter. So in that respect, we have definitely done much better. We were expecting a flat growth in terms of premium as well as profits, but there also for the year we have grown 2% in premium and 3% in net profit. So overall, we have done better. Coming on to 25, we have grown our book already because being a reinsurance company, our business comes in chunks. So the Indian market business, which generally does start at 1st April of the year. So in that business, we have grown very well. So overall, when we look at our book going forward, we expect a 15 to 16% growth for the next year. So that is a good growth compared to how the market is growing. So we are very confident for 25 about the business that we are going to write and of course the profits that we could make.
And sir, also if you could tell us what has been the premium growth and combined ratio between the international and the domestic business, and do you expect the international book to grow further until what point by FY25 end?
FY25, the international business in the overall pie would shrink simply because the domestic business has grown. Like I said, we grew substantially in the 1st April 25 business, 24-25 business. So that growth has not happened in the international business. International business normally renews on 1st of Jan, which will now happen only in 1st Jan 25. And the entire effect of that growth will happen only in the next year, because it will not, the entire growth will not show in the first quarter of 25. So when I look at the overall book, my domestic business will be higher than my international business going forward for this year. Going forward for the next few years, depending on how we are able to look at the international business, we will decide how to grow that book. For that to happen, we need to get our credit rating back to A-, which we are not at this stage. We will be pushing hard to get that this year, so that for the 1st Jan 25 renewals, we'll be able to use that credit rating and write a better book of business. So currently, as I see it, my domestic book will be bigger than my international book for this year.
Also, sir, before we let you go, could you just take us through what has been the revision in the reinsurance rates from April 2024? Which segments have seen a price increase?
So I think prices were flat. There was not much of a change in pricing. It was flat going forward. But of course, this changes depending on the events which happen. For instance, if there are catastrophic events which hit this market, obviously pricing will change. But currently for the April 24 renewals that we've just completed, the pricing was pretty flat. But we grew our book substantially across various classes.
Thank you so much, Mr. Narayanan, for joining in with us this afternoon on ET Now. It's a pleasure having you on the show and getting insights on